Good morning, good morning, good morning. Welcome to today's Morning Blast. It is Monday, the 16th of June, all day. You join me and the wonderful Mr. Michael Brown, where we'll be giving a roundup of what's gone on over the weekend, a preview of today, as it's Monday, a preview of the week ahead, etc., etc. But before we do, I'll get the legals out of the way. Nothing discussed on this space session constitute trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed Mr. Michael Brown. Mr. Michael Brown, how are you, my dear friend?
Very good morning, Ryan. Good morning, everyone, from a gloriously sunny morning here in the Garden of
Oh,
England today.
it is absolutely wonderful.
It really is.
Are you wearing shorts?
I am, actually, funnily enough.
Are we gonna see shorts being worn in the city by you this summer?
No, absolutely not.
Oh, boo.
Absolutely not. There is more chance of hell freezing over than that happening.
One day. I live in
I'll,
hope.
I'll leave the junior school PE kit look to you.
I have no defence. Right, moving swiftly on. What's been occurring?
Yes, indeed. Good morning, everyone. Well, of course, focus remains firmly on geopolitical developments after Israel's strikes on Iran on Friday, which caused naturally a risk-off day across the board, with the S&P closing down by just over 1% and the Nasdaq losing about 1.3%. Obviously, crude being the big mover towards the back end of last week, with Brent trading about 7% higher at the close, settling north of $74 a barrel and notching its biggest one-day gain since March of 2022. It must be said, though, that while those geopolitical tensions and strikes have continued over the weekend and into this morning, financial markets. Ooh, that was a terrible echo for a moment there. Financial markets appear to have sort of moved past the point of peak fear. And I think when we look back, we'll probably say that Friday morning was the point where markets were most worried about geopolitical developments. And that is very understandable, given that the strikes were, well, they weren't totally unexpected, but I think the timing was certainly not what participants have been
Yeah.
expecting. The initial shock of that has now started to fade. And I think if you look at the price action this morning, with S&P futures trading around 0.6% higher as I speak, treasuries trading softer across the curve, the 2 and 10-year and 30-year yield now all up by around 5 basis points apiece, and crude having paired, well, it was a substantial gap at the open, I think around 5 or 6% higher, but Brent and WTI are now trading as near as makes no difference flat on the day. So I think
And do you
market
know what?
participants.
And do you know what? As we say, there's no such thing as guaranteed trade, but a trade that we keep saying is kind of one of the more no. Obviously, there's no trading advice on the show, but a trade that we say that is almost a no-brainer these days is fade the Monday or the Sunday night gaps on crude when you have geopolitical uncertainty like this. We see it every time now. And again, just to really ram home the point, until we see Saudi or other key energy infrastructure hit or targeted, crude should not really be moving. Yes, it will
Yeah.
gain a bit of a premium to it. But again, something that I just want to flag, sorry to interrupt a little bit, but I think it's quite
No,
important.
no.
We saw this flagged over the weekend. Um, One small element of the PARS natural gas field, which is the largest in the world, one small element of this, it was the phase 14 element, if I recall correctly.
Yes, that's right.
Shows that I do pay attention. No one's more surprised than me, was hit. And this was basically an Iranian element of the gas field. Now, this element is tiny in comparison to the full makeup
Yeah.
of the gas field. But of course, the talking heads were saying, all the headlines you saw was the world's largest gas field is being targeted by Iran.
Yeah. A
Israel.
haystack in the corner of it has been targeted
Yeah,
effectively.
exactly that, and it's something that we actually mentioned on Friday. As I clearly said, look, it's not even about energy infrastructure being hit. Check what the energy infrastructure being hit actually does, or if it's even
Yeah.
turned on. Because we've seen in the past, Israel or Iran, or I think it was Iran actually a few years back, hit a Saudi refinery, which is great for a headline, but it turned out this thing had been decommissioned for like 2 years.
Yeah, exactly.
It's like, look, these things do make a difference. And, again, anyone calling for $100 oil at the moment needs to give their head a wobble.
Yeah.
I did repost over the weekend some very good points by Javier Blas and another geezer, I can't remember his name, basically going into detail about the Strait of Hormuz and why it would be Iran's very much their last ditch, kind of last throw of the
Mm.
dice to try and save the regime, although it would probably topple the regime if they did do it. But yeah, just one to keep an eye on. And again, fade the hype, basically.
Yeah, no, I completely agree with that. And that actually feeds into something I was just going to mention, just to sort of tie up all of the loose ends on geopolitics. A lot of questions over the weekend from, clients and on social media, whatever, effectively saying, why is the market so sanguine when there are still strikes flying around? And I think this is certainly for newer market participants, it can be quite difficult to separate
Yes.
the fire and fury and horrible human aspect that we see on the
Oh,
news.
yes.
We're not trying to belittle that in any way from the financial market side of things, because to put it very crudely,
I see
Israel
what you did there.
lobbed some, yeah, that wasn't even deliberate. Israel lobbed some missiles at Iran on Friday. Iran lobbed some missiles back. That was the surprise. That was we weren't expecting that. We now need to price in that risk. If over the weekend, Israel have continued to lob some missiles and Iran have continued to lob some missiles back the other way, that's not new information. We've already discounted that. We've already priced that in. So the question of why are markets not moving? Well, markets would, in order to see a further adverse reaction, and by adverse I mean demand for havens, oil upside, equity downside, we would probably need to see an escalation, as you alluded to, Ryan, whether that be other regional partners getting involved, whether that be key energy export infrastructure being
That's the key.
targeted,
That's the key. Exactly
that
that.
kind of thing, which thus far we haven't seen. And so long as we don't see it, I would imagine that markets are going to be able to move past this relatively quickly.
Yeah.
Actually, they might have moved past it already, to be completely
Yeah.
honest, given
And I
where
think
we see us trading this
and it's
morning.
it's very important for us to caveat this. Of course, we do not know what the next move from Israel or Iran will be. We're only
No,
basing what we say on what the current situation is. Like we say with prices when we're talking about markets, saying with these situations, they're not door numbers; they do move. So it might be in an hour's time that Iran have gone fuck it. Do you know what? And God forbid they do something completely stupid, in which case everything we've said, all bets are off. But we can't predict that, and we're not in the this show isn't about predicting what we think is going to happen next. We're just kind of
no.
trying to give some clarity on the information that we do know and on the impact that will have on markets. We're not in the game of trying to second guess what's going to happen in a week's time, in terms of geopolitical kind of tomfoolery. But yeah, it's a difficult game to play. So basically, if it all kicks off in the next 5 hours and like
Don't blame us.
it's a whole new game, don't say, "Oh, Ryan and Michael said that we're probably past the worst of it." What we're saying is the market's reaction is probably past the worst of it based on what is currently going on.
Yes, absolutely. Right, that's enough of that. Moving
Yeah,
on,
moving
because
on, moving on.
there are still some trade deals that need to be struck. Everyone seems
Oh,
to have
really?
forgotten about that, but we are what is it now? 1, 2, 3.5 weeks away from that Liberation Day tariff deadline at the start of July. We had some reports on Friday via Bloomberg citing sources that Indonesia will no longer be sending a delegation to the US for trade talks. Now, the reason I mention this is because, again, it shows why you need to read beyond the headline. A lot of people saw this and went, oh my God, things are falling apart. Well, no, the reason they're not going to the US for trade talks is because Indonesia have submitted a whole host of documentation and the US have turned around and gone, well, that's sufficient for us. You actually don't need to come here anymore. So it's actually a positive development as opposed to the
Yeah,
negative that headline may suggest. The other point on trade that I wanted to make this morning is we had US officials being cited by Reuters over the weekend, that the US is looking to potentially extend the pause or the truce with China for another 90 days after the mid-August deadline. I think this is going to become a very common theme, to be completely honest
yeah,
with you.
yeah,
Specifically between the US and China, they've both demonstrated that they do not want to, and frankly cannot stomach, a complete trade embargo between the two sides. So while they ostensibly continue to negotiate towards a full and comprehensive free trade agreement, this 90-day pause is just going to be kicked down the road 3, 4, maybe 400 times. These Reuters reports did also note, though, that while the talks in London did cover rare earth exports from China, they did not cover the usage of those rare earths for military purposes, which could well be a sticking point at some point between the two sides. In terms of other notable developments from Friday, just to wrap those up very quickly, we did have the latest consumer sentiment data from the University of Michigan out of the United States. The UMich gauge rising to 60.5 in June, well above the forecast range, and a chunky increase on the 52.2 that we saw in the month of May. The UMich number continues to be a bit of a random number generator, in all honesty. We also saw a fairly chunky decline in the year ahead inflation expectations metric. That fell from 6.6% all the way down to 5.1%. So slightly more in line with where things might be, although still far too elevated compared to where reality is likely to pan out. And a bit of corporate news for the crypto folk out there. Walmart and Amazon, they are apparently exploring the issuance of their own stable coins. This is actually more interesting than that would imply. What they're trying to do is potentially use these stable coins, and clearly this is my specialist subject, but potentially use those stable coins as a means of circumventing the traditional payment network, so Visa and MasterCard and
Yeah.
things like that. So that's possibly
Just
one to watch
just
there.
on this, I know it's something that me and I see Cam listening in. Hello, Cam. So me and Cam have spoke about this on the Crypto Blast quite a bit. I think it's actually very significant because it's a way of kind of allowing people that are kind of not crypto averse but just have no idea about crypto to almost organically be involved in the crypto what's the word, like the crypto ecosystem.
Mm,
By allowing people to be active in the crypto ecosystem without even really knowing it, it really reduces like that fear factor that people will have within crypto. And all of a sudden, again, I use the logic, or the logic, the kind of the similarities of QR codes. So remember before COVID, no one really knew how to use a QR code. Everyone was shit scared of them. It's like, what the
I
fuck's
still
this?
don't.
Well, exactly. But then COVID come along, and then all of a sudden there's a QR code on every pub table to order your beers and whatever, and now everyone uses QR codes. And it was like,
Mm.
it was a way of people to get involved in QR codes without the actual need to really understand it, and it just became a natural progression. And that's what we're seeing now with stablecoins. And I think the adoption of stablecoins and being used in this way is very, very bullish for the whole, for the whole ecosystem of crypto as a whole. I'm not suggesting it's bullish for any particular coin, but I think it's kind of it's removing those barriers to entry, which is kind of the
Mm.
scary part of the whole equation. But I'm sure Cam will talk more about this at 1 o'clock.
And we will leave it to him because he's certainly far more knowledgeable on that than I, but
And
very
me,
low
and me.
bar, admittedly. Two final things from me this morning. One for the tech-focused folk out there, Nvidia. They are partnering with Deutsche Telekom to build the first industrial AI cloud for
Oh,
EU
good.
manufacturers, which sounds very exciting, I'm sure, if anyone understands what that means. And last but by no means least, in central banking news, the Netherlands have named a chap called Olaf Schleipen as the new central bank chief. He will start his 7-year term on July the 1st. I would argue that is a class appointment, but it's a shame that the old bloke is not in a job anymore. And that is all from me this morning.
Oh, very good, very good. So just some
Very
headlines.
niche central banking done there.
Very, very niche. I didn't want to mention it, but yeah, I was like, oh, okay. Yeah,
It's the best I
gold
could
star
muster
from
up this
me.
morning.
It's a gold star from me, but I don't think you're going to get much for anyone else. So thank you for that. So just some headlines from Zach's always awesome overnight news roundup. Do subscribe if you haven't already. So starting off with Iran, obviously the Israel-Iran conflict escalates. Israel and Iran exchange attacks on major cities for a third day, with Israeli drones targeting around South Pars and Farj Jam gas refineries on Saturday. Again, which the refineries they target really does matter. Trump pushes for a peace deal. President Trump expressed optimism about potential Israel-Iran peace deal, stating on Sunday that many calls and meetings are underway, although he noted sometimes you have to fight it out. Trump has vetoed assassination plan, apparently. Trump rejected an Israeli proposal to target Iran's supreme leader, the Ayatollah, according to US officials. That's quoted by Reuters. US involvement is possible. Trump indicated the US could become involved in the Israel-Iran conflict, raising concerns about escalation. We also saw Rachel Reeves. Why she's commenting on this, I do not know, but we did see Rachel Reeves from the UK over the weekend suggesting the UK may be involved, potentially like they did before when Iran was sending missiles over to Israel, where they were using UK assets to shoot them down. Trump and Putin.
Clearly, they
Sorry, go on.
ran a. I was going to say, clearly they ran a comprehensive geopolitical training course on the HBOS customer service desk back in the day.
Oh, absolutely, absolutely. Right after the Thomson's Reuters KYC video that we had to do. Uh, oh God, memories. Trump-Putin call on the crisis. President Putin and Trump discussed the Israel-Iran conflict in an hour-long call on Saturday, signaling international efforts to address the crisis. I do remember seeing Trump tweet about this, and it started off with, Putin called me to wish me happy birthday. Oh, and then we
Mm.
spoke about Israel and Iran. I was like, okay, great. On trade news, US-China trade truce stalls. The recent US-China trade truce left unresolved tensions over export restrictions, particularly US military purchases of rare earth magnets and Chinese AI chip acquisitions. This is threatening the broader deal, according to Reuters. Taiwan, they blacklist Huawei and SMIC. Taiwan's blacklist of Huawei and SMIC delivers a significant blow to China's AI chip ambitions. Trump approves Nippon Steel deal. Trump greenlit Nippon Steel's $14.9 billion acquisition of US Steel, overcoming the union opposition and national security reviews. I think there's argument to say that's one of the biggest stories, non-geopolitical stories we've had over the last couple of days. India halts rare earth exports, kind of following on what China have already done. India suspends a 13-year rare earth export deal with Japan to prioritize domestic needs and reduce reliance on China. Macro news, China's economic challenges. China's factory output growth slowed to a 6-month low in May, while new home prices dropped sharply, prompting renewed government pledges to stabilise the property market. We hear a lot of China trying to stabilise their property market. Unfortunately, it's mainly all fart, no poo. They seem to love a commitment, but nothing actually solid comes out of it. Bank of Japan, they're considering a slower tapering, apparently. According to Nikkei, the Bank of Japan is weighing a plan to halve its JGB purchase, tapering to 200 billion yen quarterly, starting in April 2026, to be discussed this week. Germany's economic outlook improves. Analysts predict Germany's economy will return to growth in 2025 after 2 years of contraction, with slightly optimistic near-term outlook. I'll believe it when I see it. Geopolitics away from the Middle East. Russia targets Ukraine refinery. Russia's overnight missile and drone attack struck Ukraine's oil refinery in Kamachuk, a key facility previously hit in 2022. US senators push for Russian sanctions again. Senator Graham warned of new congressional sanctions if talk with Putin fails, urging Trump to adjust his Russia strategy. Finally, for me, some equity names. Google's Wiz deal under scrutiny. The DOJ is reviewing Google's $32 billion acquisition of Wiz Inc. for potential anti-competitive effects in cybersecurity market. That's according to Bloomberg. TSMC's 2-nanometer breakthrough. TSMC's 2-nanometer chip yields hit 60%, reaching mass production levels, while Samsung lags at 40%. TSMC Arizona also completed its first chip run for Apple, AMD, and Nvidia. Santos backs a $18.7 billion takeover. Australia's Santos supports an $18.7 all-cash takeover bid from ADNOC, led consortium aiming to build a global gas business. And finally, for me, Amazon's AI push in Australia. Amazon plans a $13 billion investment to expand its Australian data centres to meet AI global computing demand. And that's it from me. Back to you in the studio.
Very good. Thank you, Ryan. In terms of the day and the week ahead, then, we've already kicked off with some data out of China this morning, both retail sales beating expectations, industrial production broadly in line with consensus, although usual caveats apply with that, i.e. it is completely made up. As for the remainder of the day, the data docket is relatively barren. We do have the monthly Empire Manufacturing Survey out of the States at 1:30 this afternoon. Of course, for those unfamiliar, that does help to shape expectations for the nationwide
Indeed.
manufacturing PMIs that we get in a fortnight or so. We also have a 20-year Treasury auction at 6 o'clock this evening, $13.13 billion being sold off. I'm going to preempt this. 20s are like the most unloved segment of the curve ever.
It's the ginger stepchild of the Treasury
It
curve.
absolutely is. The bloke who reintroduced them, my doppelganger, Steve Mnuchin,
He doesn't
regrets
even
doing
like
it,
them.
which
Yeah.
should tell you everything you need to know. If the auction is poorly received, bear all of that context in mind. You're going to have, the usual suspects running around saying people won't lend money to the US, they're going to default, all that nonsense. It's a 20-year auction. It's not something we
Yeah.
should read too much
And the
into.
thing is, and also remember 2 weeks ago, I think it was 2 weeks ago, actually it might have been before I went on my travel, so possibly 3-4 weeks ago, we had exactly this. A shitty treasury, a shitty 20-year auction.
Mm,
Everyone threw their toys at the pram, said, "Oh my god, this is the death of treasuries." And then, what was it, 2 days later, we had a 10-year auction or a 5-year auction, whichever one it was, and it was oversubscribed massively. It was a
yeah.
really bullish auction.
And actually
So yeah,
on
bear that in mind.
yeah, and actually on that, last year's 10 and 30-year sales went down very, very well indeed, which are far more important.
There you go.
Anyway, enough
Exactly.
of my rant. As for the rest of the week, it is actually a very, very busy week ahead, to be completely honest with you. 6 G10 central bank decisions lie in wait. The Bank of Japan kicking things off in the early hours of tomorrow morning, set to hold rates steady at 0.5%, but retain a bias towards further hikes in the months ahead. Also on Tuesday, in terms of data, we have the latest ZEW sentiment surveys out of Germany, and from the States, we get the May retail sales and industrial production data. On Wednesday, here in the UK, it is CPI day. Headline CPI seen falling to 3.3% from a prior 3.5%. Services CPI seen falling to 4.8% from a prior 5.4%. Although do bear in mind, of course, that the ONS made an absolute pig's ear of calculating the April data. They say
No
that,
shocker there.
they say that those issues have been resolved, but whether we believe them or not is up for debate. On the policy front, on Wednesday, we have a decision due from the Riksbank. They are set to cut rates by 25 basis points to 2%. Also, of course, on Wednesday, we have a decision due from the FOMC. The Fed expected to maintain the target range for the Fed funds rate steady between 4.25% and 4.5%. The latest, blimey. We will also be getting the latest, quarterly summary of economic projections from the FOMC, which, given the prevailing degree of uncertainty, should be taken with a bit of a pinch of salt. But nevertheless, inflation forecasts are likely to be revised higher and growth expectations likely to be revised lower. We also have the Fed's updated dot plot on Wednesday as well. Consensus very much leans towards that median dot for this year being maintained to signal 50 basis points of cuts by the back end of 2025. I would not be at all surprised if that dot was nudged a little bit higher to signal just 25 basis points of cuts, because it's only going to take two policymakers moving their individual dot
Good
above
insight.
the current
Good
median
insight.
to move that entire median higher. So do bear that in mind. It is also quite a busy day of data on Wednesday as well. We get the latest housing starts and building permits figures out of the states, and we also get the weekly jobless claims numbers, which are out a day early. And the reason for that is because Thursday is Juneteenth, which means that US markets will be closed in observance of that federal holiday. Nevertheless, on Thursday, we have three more policy decisions. The Swiss National Bank expected to cut rates by 25 basis points to 0%. There is some speculation that the SNB may go with a 50 basis point cut, which would obviously see rates return to negative territory, which we all thought we put behind us, but clearly we may not have done. Also on Thursday, the Norges Bank, they're set to hold rates steady at 4.5%. And of course, the Bank of England, who are set to hold rates steady at 4.25%. But we should get two, maybe three dissents in favour of a 25 basis point BOE cut on Thursday. And then wrapping up the week on Friday, we've got inflation data out of Japan, borrowing and retail sales figures from here in the UK, and retail sales figures from Canada as well. And of course, as the week goes on, not scheduled events, but focus will also remain on the issue of trade and also on geopolitical developments in the Middle East.
Question for you.
Go on.
Only because it's starting to, in my kind of spider sense, is starting to very, very subtly tingle What do you think the chances are that the BOE surprise us with a cut?
I mean, it's the BOE, so they could surprise us with a hike. That's probably about as equally likely, isn't it? Um, I
Well played.
I can't envisage it just because I mean, the BOE don't speak publicly that much anyway.
Well, this is it.
But
Yeah.
there haven't been, when they appeared at the Treasury Select Committee about a fortnight ago, Bailey, Breeden, etc., they were all sticking to this gradual and careful approach. So yeah, I would be surprised if they pulled the trigger on a
Oh yeah,
cut.
no, don't get me wrong.
Um,
I don't make it odds on, but I don't know. I think
the
because just the
one
way the
thing,
UK, because of the UK, the way I tell you my thinking, why I think there's more of a chance of a surprise than we've had in the last few previous meetings, is because I think the way the UK economy is currently set up with, um, the borrowing and etc. I think if there was an argument to be made for a surprise, it would be this one,
mm,
more so than potentially the last couple of years.
yeah.
So yeah,
And
it's if do you see my point
Oh
on
no,
that?
100%. And I would actually clarify, this is a classic case where I'm explaining what I think the bank will do. If I was on the
Yes,
MPC, I'd be sat there saying we need to cut 25 basis points
yes, no,
right
exactly.
now.
That's a very crucial difference to
I'm
make.
not talking
Good
about
point.
what I think they should do. The last thing I'd say on the BOE is that inflation data that's due Wednesday morning. The bank will actually have advanced sight of that from
Yes,
today, because today is when they hold their pre-MPC meeting. So it's not as if they're going to see the figures at 7 a.m. on Wednesday and vote
no,
at
no,
5
exactly.
p.m. They will have some time to digest whatever that data says.
Yeah, no, very good, very good, very good. Michael Brown, thank you very much. Listeners, thank you as always. Just a bit of personal news, because I know a lot of you, thankfully, well, thank you for asking privately, especially about my old man. Obviously, he had his triple heart bypass on Friday. So far, so good. Touch wood. Next few days are obviously crucial. So, yeah, fingers crossed. Thank you for all your support that's been shown. But yeah, on that note, wish you all an amazing day. If you are trading today, keep it tight. Whatever you're doing, stay safe. Much love. And me and Michael will see you tomorrow morning.
Indeed. Bye for now.